Ever felt like building a stock portfolio is like walking on thin ice? One wrong move and it might be your worst downfall. Well, that's a bit of a stretch. But finding the perfect balance in your portfolio can be tricky, especially if you're a newbie. By now, you've probably heard of diversification already. If not, it's basically spreading your investments to reduce risk. But have you heard of diversification? No? Well, it's when you diversify so much that you will actually suffer. So, how do you find the sweet spot, and how many stocks should you own? Welcome to Financial Literacy. Here, we are dedicated and passionate about bringing you nothing but honest and straightforward facts about your money. We will help you take control of your finances and get you to the next level. Beginners or experienced, this is your one-stop shop for all things financial literacy. In this video, you will know how many stocks you should own according to the legendary Warren Buffett. Not only that, I'll tell you some tricks and tips along the way to become the next legendary investor. So stick around until the end. Without further ado, let's start the video. How many stocks should you own? The allure of the investing world is undeniable. The thrill of the chase, the potential for immense reward, and yes, the ever-present risk of losing it all. But to not stumble and be left with just a bruised ego, many turn to the wisdom of the investing legend, Warren Buffett. One of Warren Buffett's most valuable lessons concerns the art of portfolio diversification. It's about striking the perfect balance, spreading your investments across different assets to minimize risk, without sacrificing returns. Now, the key to success isn't just blind action. Diversification isn't throwing darts at a stock board and hoping for a bullseye. Think of it like building a dream team. If you've done your research and identified a handful of high-quality companies, why overload yourself with a large roster? Focus on your best horses, the stocks you have the most confidence in. However, in-depth analysis may not be for everyone. If extensive research isn't your forte, diversification becomes even more critical. It acts as a safety net, ensuring you're not overly exposed to the potential downfall of a single company. So, how many stocks are we speaking of? Any guesses? I'll give you 5 seconds and maybe consider liking and sharing this video with others. Alright, so Warren Buffett suggests 20 to 30 carefully selected high-quality stocks. That's his sweet spot. Now don't go away yet. I'll teach you how to pick the best stocks, the Warren Buffett way. Warren Buffett is all about identifying stable, well-established companies with bright futures. He calls it picking the winners, and not just about blind luck. It relies on sound analysis and a deep dive into the companies themselves. Think of it as fundamental arithmetic with a dash of strategic thinking, not complex equations designed to leave you scratching your head. Now, let's talk about the cornerstone of Buffett's philosophy, the rock-solid foundation. Imagine a company with a balance sheet as dependable as your favorite pair of jeans, something you can rely on year after year. That's the kind of company that gets Buffett excited. Analysts might throw complex jargon and colorful charts your way, but Buffett focuses on the core financial health, simplicity, strength, and resilience. These are the golden keys he uses to unlock hidden investment gems. Now let me teach you to handle your portfolio like a pro, because even the most meticulously crafted portfolio may require adjustments over time. Managing a portfolio is a constant dance between stability and evolution. And here are Warren Buffett's tips for you and me. The first principle: selling isn't fortune telling. It's about recognizing shifts in a company's fundamentals. Imagine a once thriving business experiencing a decline in its core strengths. Just as you wouldn't hold onto a relationship that's built with lies and manipulation, don't let sentiment cloud your investment decisions. Like a samurai wielding his katana with precision, Warren Buffett advocates for strategic exits when a company's trajectory changes. The second principle: restructuring isn't demolition, it's a strategic evolution. Think of your portfolio as a well-oiled machine. When parts begin to malfunction, You won't scrap the entire system, right? Instead, you would replace the faulty components with more reliable ones. Similarly, portfolio adjustments involve removing underperforming assets and replacing them with investments that align with your long-term goals. Remember, it's a process of refinement, not a haphazard dismantling. Finally, remember that resilience is the bedrock of successful investing. Market downturns are inevitable, but they're mere blips on Warren Buffett's radar. Channel your inner Buffett. Don't let market fluctuations panic you. Investing is a marathon, not a sprint. Maintain your composure and trust that the power of compound interest will work its magic over time. If you apply these 3 tips from Warren Buffett, you'll most likely master your portfolio and build the best portfolio investors could ever see. Okay, so if you're still here, I want to congratulate you because you are one step closer to becoming the next Warren Buffett. Pat yourself on the back. So now that you know how many stocks you should own, how to pick the best ones, and how to handle your portfolio, I'm gonna tell you how to overcome the common roadblocks in choosing this road to wealth. Roadblock number 1: missteps and mistakes. Making mistakes is inevitable, even for seasoned investors like Buffett. Think of them as learning experiences, like a bad shampoo choice that leads to a rinse and repeat situation for your portfolio. Embrace these missteps as opportunities for growth, just like Buffett has throughout his illustrious career. Roadblock number 2: the FOMO frenzy. The fear of missing out, or FOMO, can be a powerful force, especially in a fast-paced market. Just like the friend who tempts you with delicious treats while you're on a diet, the market can present alluring opportunities that might not align with your long-term strategy. Remember, Buffett prioritizes discipline and resists the FOMO siren call. Roadblock number 3: the greed monster. Greed can cloud our judgment and keep us clinging to underperforming investments. Even Buffett admits to wrestling with this beast early in his career. However, like slaying a dragon in a video game, overcoming greed is a crucial step in building a healthy portfolio. By recognizing these roadblocks and applying the wisdom of Warren Buffett, you can navigate the investment journey with confidence and build a robust portfolio for the long term. And there you have it. Warren Buffett's investment wisdom is like a financial compass, guiding you towards a brighter financial future. Remember his insightful quotes: "Be fearful when others are greedy," and "Our favorite holding period is forever." These pearls of wisdom aren't just clever sayings. They're the keys to unlocking long-term financial success. So now, don't just be an admirer in the audience. It's your turn to take center stage. Craft your own investing philosophy, a powerful mantra that resonates with you. Let Warren Buffett's wisdom be your compass, but chart your own course toward a prosperous future. The time to take action is now. There's a treasure trove of resources waiting to help you build your dream portfolio. So, set sail on your investment journey, armed with knowledge, confidence, and the timeless wisdom of Warren Buffett. Thank you so much for watching. If you want to see more, hit that subscribe button to get notified of our latest videos.